Hello everyone, good morning, good afternoon, good evening, depending upon when you're watching this video lecture. Today let's focus on contract costing, which is an extension of job costing but completely different from job costing. Though by definition we can say contract is nothing but a bigger job, but the principles of job costing are different because usually job costs are calculated on the basis of the actual materials and labor which is used in the job and applying the predetermined overhead rates which have been calculated already for the organization as a whole. So that is altogether a different approach towards costing. As one of the methods of costing, job costing is different. Contract costing, though it is just a bigger job, is more of accounting in nature than costing. So usually the requirement here will be to prepare a contract account, and a lot of information about a particular contract will be given, and in general the objective of preparing the contract account will be to find out how much is the estimated profit from the contract or notional profit from the contract. So there are certain special features of contract compared with others. Usually the contract is normally carried out at the site of the contract, not at the factory or something like that. And from costing perspective or accounting perspective, whatever we call it, usually the contracts have a separate account for each contract. So when we look at contract costing, we should understand, let us say a big organization like Larsen and Toubro L&T will have hundreds of contracts being executed throughout the country. They will have a separate contract account for each of them to understand whether each contract is making some profit or not. And all of them will be ultimately transferred to their profit and loss accounts, if there is a profit also or loss also. So the income statement of the company as a whole is different. Only for a particular contract, what are the financials, if we see, that is what is contract costing or preparation of contract account. But once again, though we call it contract costing, this is more of accounting. Preparing an account, debit, credit, those things will be there. However, the differences between other things like in accounting normally what we do and here in contract costing is, usually for example, let us say there is a plant which is used. Under normal accounting we just provide depreciation on the debit side, but here we can calculate the depreciation in different ways according to the information given, and sometimes we can debit the plant that has been issued to the site and then credit the plant value at the end of the year on the credit side. So naturally what happens, the difference becomes effectively depreciation whether we call it or not. Let us say if there is a 5 lakhs worth of plant being issued to a particular contract, that will be debited. Imagine at the end of the year its value is 3,75,000, that will be credited. Normally these capital items we don't debit credit in the regular accounting, but here we do that because it is not anyway full-fledged accounting also, not even full-fledged costing also, so somewhere hybrid. So we debit the plant issued to site, and we credit the plant value at the end of the period at site. So what is the effect of this? Net effect, if we see, naturally debit is more by 1,25,000 than credit. That itself is a depreciation. Whether we calculate separately or we do like this, effect is the same. So that point we should understand. We cannot be rigid once again using the same financial accounting principles which we normally do. So when we look at contract costing, it is more of accounting, no doubt, but at the same time it will not follow all the principles of accounting also. It will follow its own general rules, or we can say the situations. And if at all journal entries are asked from the contract costing, simple thing, whatever the cost which is related to the contract will have to be debited to the contract account. So if at all materials are issued to the contract, then contract account at are to stores ledger control account if they are issued from stores, or to cost ledger control account if they are direct purchases. If at all there are contracts shifting materials between themselves, then contract number 1 account to contract number 2 account, like that also can happen. The receiving contract will get debited, the sending contract will get credited. That is also another possibility. These are only if journal entries are asked, which is very rare. If they are asked also, we should be able to find it. Then ultimately, whatever the profit or loss that is coming from the contract will have to be transferred to the costing profit and loss account. That has to be transferred. And any other expenses, if they are incurred from the stores, then that will be also transferred to the contract. So the point is, irrespective of whether it is a materials issued to the contract, labor worked on the contract, direct expenses incurred on the contract, indirect expenses incurred on the contract, we don't have any other special accounts like overheads and all. Everything will be automatically debited to the contract account. So what contract account will have on the debit side? Naturally, all the expenses it will have. Then plant and machinery, as we just now discussed, we can debit the value of the plant issued to the contract, and maybe at the end of the year we can have the plant value at the end of the year on the credit side. That is one way. Alternatively, we can just debit the differential between those two as depreciation. That is also possible depending upon the information in the question. So like this, many journal entries also are possible to be asked. But most important point here to understand is certain particular terms which are used in the contract costing. So here, on the credit side, what will be there? Okay, debit side, all the costs related to contract are there. Okay. On the credit side, what will be there? Can we credit the contract price? No, we cannot. Why? Because normally the contracts are carried on over a period of time, not just completed within 1 year also a lot of times. So the costs that you are all debiting are factual things. The credit, if you give to the contract price, that is wrong. There is no matching principle there if we do that. So that is why we cannot credit the contract price itself, because that contract price is for the entire contract, but we did not complete the contract yet. If we completed, then it's okay. Otherwise, it is not okay. So what should we credit then? Credit should be given to the work in progress. When the contract is not yet completed at the reporting date, what credit should be given? That will be work in progress. And that work in progress will consist of the cost of work completed, which consists of two things, which is both certified and work uncertified. So there will be work certified and also there will be work uncertified. Work we have done, but the uncertification for that has not happened. In order to understand this, we should understand how it actually works or how it happens operationally in the real life. See, normally what happens when a contractor is working on a big building, you can take a big example so that we can understand. So let us say a contractor is working on constructing, let us say, a metro train project like L&T. So, or a highway or a big building is being constructed. It will take multiple years to complete that contract. That is first point. At the end of the period, we need to close the financials and we need to know what actually has happened in the financial terms about this contract. That is why we are preparing this contract account. We cannot say, okay, wait, let the contract complete, then I will come to know what it is. That will not be correct. So, what is happening here? Why are we preparing this contract account and all is? We want to know what is the financial result of this contract before even that contract is actually completed. That is the first point. Second point, when we are doing a contract, the other party for whom we are doing the contract, we can call him contractee. Contractee will have either himself or he might have another consultant who will certify the work. So the extent of the work which is certified the engineer is called as work certified, and the extent of the work which is done, we did it, but engineer did not certify yet. Maybe he'll certify in future, but as of now he did not certify. That is called work uncertified. So work certified, work uncertified will be part of the closing work in progress of a contract, which will be the credit side of the contract account. Debit side is all just a dump of all expenses. That is one thing. Of course, we cannot do anything now about future things. Cost of the work not yet completed, estimated profit and all. Those things will be prepared as a separate statement or a memorandum account. Real account cannot have any notional things. Though the profit that is arrived out of this contract itself is not real profit, it is called notional profit. But as far as the credits and debits are concerned, they cannot be anything which are futuristic. That can be dealt with separately outside the contract account as a statement or even a memorandum account can be prepared for finding out future probable estimated profit. And the same things which we are talking as work certified, work uncertified, they will be shown in the balance sheet asset side also, because they are the assets. And whatever the amount that is receivable from the contractee is also represented by that. And whatever the amount which is still to be certified but not yet received, that becomes a receivable also in the balance sheet. So that is again financial accounting thing. Mostly we don't have to much worry about that. If at all a balance sheet extract is asked, we can show these things at the asset side of the balance sheet. Let us say at the end of the year, material set side, plant at site, work certified, work uncertified as work in progress. That is the balance sheet item, which is also part of accounting but not definitely contract costing. So what is this cost of work certified and value of work certified? This is a very crucial thing. If this is understood, the contract costing is clear. Remaining things are all just copy paste and calculations. Work certified is the crucial thing. Here there are two words used. One is cost of work certified. Second one is value of work certified. Both are not same. There will be profit in that naturally. Let us say if a particular contract was agreed to be 10 lakhs rupees, that was the contract price originally. Let us say the work certified was 75% of that. That means 7,50,000 is the value of work certified. Did we incur the cost also same? No. Cost is reality. Value of work certified is the percentage of the contract price which has been already certified by the engineer. So that is the difference we have to understand. So on the credit side, work certified, what we will write? We will write the value of it. And on the debit side, all the costs are there. So that is why naturally there will be a profit or loss arising from that, which is not complete also. That is why we don't call it a real profit. We call it a notional profit. So when it comes to work certified on the credit side, what should be there? Value. But on the debit side, so many costs which I have done already and debited, that is representing cost. But that is representing what? Not just cost of the work certified. It is representing the cost of work certified also and uncertified also, because we have all done that work, though it is not certified. So when we say the cost of work certified, that is different. When we say the value of work certified, that is different. That difference is a crucial thing. Whenever the certification of work completion has happened, that is called as the percentage of total work. So how to get the value of the work certified? Simply value of contract into percentage of work certified, which we applied here as 75% in our example. Now, how to get cost of work certified? That is not same. That is not same. That is how to get cost of work to date. That is all this total debits we have already done on the debit side of contract account, minus of cost of work uncertified, not value. For uncertified, we should not take value because we don't know whether it will be certified or not in future. So for uncertified, we have to take cost. So cost of work to date minus of cost of the work uncertified plus materials in hand at the end of the period, plant at site at the end of the period. If you reduce them, that is what is the total cost of the work certified. So when the debit side consists of all the costs, from that, what we have to reduce is cost of the work uncertified, materials in hand and plant at site. Then what we get is cost of work certified. Then naturally, what is the difference between the value of work certified and cost of work certified? That is the estimated profit or notional profit actually. Estimated profit is something different which goes beyond it. Notional profit is that. So that is the difference between value and cost of work certified. Cost of work certified is definitely separately we will not do. It will be already there included on the debit side. All the costs are actually incurred will be debited to contract account. But value of work certified we have to find out by taking a percentage on the contract price. That's it. How to get cost of work uncertified? Then reverse mechanism. So here cost to date minus of cost of work certified minus of materials in hand minus of plant at site. If you look at the same equation, when you have the cost of work certified is equal to cost of work to date minus of cost of work certified minus materials in hand minus plant at site. If this goes to the other side, it becomes plus. Cost of work certified, it comes to the right side, it becomes minus. So both are same. Equation is same. When you get the cost of work certified, you can get the cost of work uncertified also. But usually we will not get the cost of work certified or uncertified. You will get actual cost incurred, which is cost incurred to date. Minus if you take the cost of the work certified, and minus if you take the material at site and plant at site, we get the cost of work uncertified. That is how they can be found out. Though it may not be really important for contract account, but just for understanding purposes, progress payments can be made by the contractee to the contractor. We are preparing in the books of contractor, that we should keep in mind. So progress payments means generally on the basis of the percentage of work done, the client will keep on paying some money. That is progress payment. How to get that? Value of the work certified, payment it is. So client is paying to us. So what he pays? Value of the work certified minus retention money minus payments if at all already done to date. That will be the progress payment that client releases on a periodic basis. Then the question comes, what is this retention money? Retention money usually is kept by the contractees to have a cushion against any defect or the undesirable work in future. So some money they will hold, they will not pay fully. Though they certify 80%, they may not pay 80% of the value of the contract. They may retain some money, that is called retention sum or retention money. That's like a security money kept with the contractee up to some time. Usually it can be also called as earnest money. And in future, if there is any deficiency or defect noticed, that has to be rectified by the contractor. Otherwise, retention money will not be released. That is a practical way it works. So what is retention money, simply speaking? Value of the work certified minus payment actually made or cash what actually is paid, that is retention money. Then what is cash received? Value of work certified minus retention money. So always we should understand the receivable from the contractee is only towards the value of the work certified. For the work which we have done but not certified, there is no obligation to the contractee. We incurred the cost, but that will not be received now. In future, if it is received or not, that is a different story. So cash receivable now will depend upon the value of the work certified only. Minus if any retention money is there. Anyway, that will be reduced, its remaining will be paid to the contractor. That means we will receive that money as contractor. Then what is notional profit? That is our actual outcome of this contract account. Value of the work certified minus of cost of work to date, right? And minus of means plus actually cost of work not yet certified. So on the credit side, if you take and minus debit side, that is profit, na? That is just told in the form of equation. Value of work certified plus the cost of the work uncertified, because minus of minus becomes plus here. So this is two things: value of work certified plus the cost of work uncertified minus cost of work to date. Okay, cost of work to date, not necessarily only the debits. That will be debits minus the plant at site and materials at site at the end of the period. So the net effect of contract account is simply notional profit, nothing else. But that is for the work already done. Then estimated profit is different. Estimated profit is not about now or what happened. It is about future. That is why we are calling estimated profit. What is that? That is the excess of the contract price over the estimated total cost of the contract. Estimated total cost of the contract will be how much? Whatever the cost already incurred, which is the reality, plus the cost which might be incurred in future on this contract. That gives us the total estimated cost of the contract. Reduce that from the contract price, we get estimated profit. What do you do with that? Here we don't do anything with that. At costing level, we just leave it there. Notional profit, if we compute, in general, most of the questions they stop at notional profit. And if some further information about future is also given, they may ask us to also compute estimated profit. Dot. Nothing else we do. Whether this can be really recognized as profit or not, that is not the subject matter of contract costing. But yes, accounting standard 7 is there for that. That is accounting for construction contracts, which we will deal with in the accounting separately later. But that is not the subject matter of contract costing. So we don't worry about how much of the profit should be really recognized, how much should not be recognized. Different methods are there in AS7. So AS7 we should not invoke here is my point. We should not worry about that. We should just focus on the costing type of questions. A7 is also a similar thing which also has the same logic, understanding, concept, everything will be similar. But the point is A7 tells us about the revenue recognition from the contracts, which we are not doing here. We are only just calculating two things. One, notional profit normally. Second, in some cases, if data related to future is also given, then maybe estimated profit can also be computed. That is the scope of this contract costing in a nutshell. Now let us do some illustrations and problems related to contract costing. Illustration 3 in the ICA material asks us to compute estimated profit on a contract which has been 90% complete from the following particulars. Total expenditure to date is 22 lakhs 50,000. Estimated further expenditure is a future expenditure including contingencies is 2 lakhs 50,000. Contract price is 32 lakhs 50,000. Work certified is 27 lakhs 50,000 and work uncertified is 1 lakh 75,000. Cash received is 21 lakhs 25,000. It's not a big problem and all. It is just a simple thing. How to calculate estimated profit? First of all, what is the contract price? The contract price is 32 lakhs 50,000. That is the contract price. And expenditure incurred to date plus estimated expenditure. Total expenditure that is possible to be incurred total on the contract is how much then? That is 25 lakhs. 22 lakhs 50,000 plus 2 lakhs 50,000. So simply, how much will be the estimated profit? That will be 7 lakhs 50,000. That's all. So that's just a simple example to understand estimated profit, which is nothing but contract price minus total estimated cost of the contract, which includes cost already incurred and cost which is supposed to be incurred in future also. That is about estimated profit. Now there are different other words also like cost plus contract or lump sum contract or escalation clause sometimes could be there also in the contract, wherein the contractor will have power to revise the price of the contract in case the prices of inputs are changing due to some macroeconomic or other agreed reasons. So that is called escalation clause. Again, we don't have to assume any of these things as per the information given in the question. We'll just apply this so that the contract price will be increased, nothing else. So according to their contract, according to the agreement between them, we have to apply those clauses if there are any. So here, normally, if it is a fixed price contract, then there is no change in that. Or there could be a cost plus contract also, wherein the real cost that is incurred will be calculated and the contractee will pay a percentage of profit over and above the cost to the contractor. That is cost plus contract. These are the two types of contract broadly, which is cost plus contract and fixed price contract. That is again for general conceptual understanding only, but actual problems from this chapter will be like this. Following expenses were incurred on a contract. Materials purchased 6 lakhs rupees and material drawn from stores, etc., etc. was there. So let us just look at what is required. You are required to compute the value of work certified, cost of the work not certified, and notional profit. Ultimately, the notional profit for the year ended 31st December is what we should calculate. For that, naturally, what we should prepare is contract account. So let us prepare the contract account. Materials purchased 6 lakhs rupees should be debited to the contract account. Materials drawn from stores also should be debited to the contract account. Wages 2 lakhs 25,000 should be debited to the contract account. All expenses should be just debited. Plant issued means it was given to the contract, so debit to that contract account. Of course, at the end of the year, what is the value of the plant? That will be credited later when it is given. Then chargeable expenses 75,000 also debit to the contract account, whatever they are. Apportioned indirect expenses also 25,000 debit to the contract account. All expenses copy paste. Now the further details. The contract was for 20 lakhs rupees and commenced on January 1st. Okay. The value of the work completed and certified up to 30th November was 13 lakhs rupees, of which 10 lakh 40,000 was received in cash. The balance being held as retention money by the contractee. The value of work completed subsequent to the architect's certificate, but before 31st December was 60,000. So that is one more point. And there were also lying on the site materials of the value 40,000. So let us call them as materials at site. Generally they will be there always. That is how much? Materials at site 40,000, and plant at site at the end of the period was 30,000. The value of the plant on 31st December was 30,000. That's it. These are the things which are given. Now, the point is, what is work's value of the work certified and cost of the work not certified is asking. Original contract price was for 20 lakhs and value of the work completed and certified up to 30th November was 13 lakhs. Okay, that means that is the value of the work certified, 13 lakhs. So work certified is 13 lakhs. Value, that is not cost. That is the value of the work certified. Given in the question, there is nothing to compute. Okay, some money is given in cash, remaining was kept as retention money. That has nothing to do with contract account. That is something related to the receivable and other things, not related to contract account. But the value of the work completed is subsequent to the architect's certificate, but before 31st December 2008 was 60,000. Here the word used is value. It is uncertified, that is clear. But what do you want is cost of the work not certified. But the word used in the question is value. I think that is wrong. They should have given it as cost of the work uncertified only, because this 60,000 cannot be called as value. That's a wrong usage. That is taken as cost of the work uncertified only, not value. Since we don't know whatever the percentage here, we can find out also proportionately. If it is value also we can find out, but I think as per the solution also it is not value, it is cost of the work uncertified. Okay, let us take it like that rather than complicating it. Anyway, in other questions we'll have to compute these things. There we will do. So 60,000 rupees is the cost. Change this, not value, it is the cost of the work completed but not yet certified. That is the cost of the work uncertified. That's all, everything we have. All that we need to do is once again totaling and balancing this account. Then what we get as a balancing figure is the notional profit. That is 4 lakhs. 5,000. Why? Did I miss anything? 6 lakhs, 1 lakh, 2 lakhs 25,000, 75,000, 75,000. Oh, 275,000 are there. 275,000 are there. One is a plant, other one is chargeable expenses, also 75,000. Yeah, plant issued, chargeable expenses, 275,000 are there, and then 25,000 is anyway indirect expenses. So naturally the notional profit will be 3 lakhs 30,000. That's it. That is how the contract account is simply prepared. But again, this is not a standard exam level question. If such question is asked, it can be only asked for a maximum of 5 marks. But a 10 marks question will be naturally much bigger than this. Okay. So, but yeah, that tells us how to prepare a contract account. Yes, to that extent, this is like a practice question, we can say. Now, go to question number 5, illustration number 5. The following, a contractor prepares his accounts for the year ending 31st December each year. and he commenced a contract on 1st April 2008. 1st April means 9 months only he has actually worked during this year, because his year ending for financial accounts is 31st December. That is first point. And the following information related to the contract on 31st December, whatever it is. Materials issued, same thing, 2,51,000 debit to the contract account. Wages 5,65,600. Then salary to foreman 81,300. Then look at the further data. A machine costing 2,60,000 has been on the site for 146 days. Its working life is estimated at 7 years. And its final scrap value is 15,000. For this, we can calculate depreciation separately rather than taking plant at site and all. So we can directly charge depreciation. So look at this way. 2,60,000 is the cost of the machine, minus 15,000 is the scrap value. So 260 minus 15 is 2,45,000, and that will be for useful for how many years? 7 years, he says. Right? That is the working life. And that means per year it is 35,000. But how many days it is used actually in this contract? Only 146. So 146 by 365. 146 by 365, that will be 14,000 rupees is the depreciation on the machine. That can be calculated separately in the working note. Done. Then a supervisor who was paid 8,000 rupees per month, that is, has devoted one half of his time. One half means half. People sometimes take one half means one and a half. No, one and a half is different, one half is different. Wherever one half means it is half of his time to this contract. Okay, 8,000 per month. Again, this can be calculated separately. Like that, how many months? Not 12 months. This contract started only on April 1st, and we are preparing accounts on 31st December. Means only 9 months divided by 2, because it devoted only half of the time to this contract. So what is the total salary for this supervisor that can be charged to the contract is only 36,000. All other expenses and administration charges amounted to 1,36,500. Take that also. Material in hand at site cost 35,400. Material at site 35,400 at the end of the period. So that is closing stock type. On the credit side, that is 31st December. Contract price was 20 lakhs rupees, and on 31st December 2000 exit, 2/3 of the contract was completed. 2/3 of the contract was completed. So contract price is first of all 20 lakhs rupees. 2/3 of the contract is completed means value of the work certified could be this, but it did not certify 2/3. There is another information given. The architect issued certificates covering 50% of the contract price only. That means only 10 lakhs rupees was the value of work certified. Though the contract price is 20 lakhs, but though the 2/3 of the work was completed, architect did not issue certificate for 2/3 yet. He issued certificates only covering 50% of the contract price. So what is the value of the work certified? Contract price into 50% divided by 2. That means 10 lakhs is the value of the work certified. Of course, he paid 7,50,000 is not relevant for contract account. And what we are required to prepare is a contract account and show the notional profit or loss as on 31st December is the question. Okay, everything is there except what? This cost of the work uncertified is not there. How to get that? Cost of the work uncertified. Cost of work uncertified. How to get that? For that, we need to take cost of work to date minus of cost of work certified. This is what we should calculate. Minus of cost of work certified minus of plant at site or material at site. Right? So what is the cost of the work done to date? Total of debit side, don't total it now itself, just total separately. 10 lakhs 84,400. That is the total. 10 lakh 49,000. Okay, minus this, it will come like that. Correct. 10,84,400. That is the cost of work to date. Then materials at side we know, that is 35,400. Now, cost of the work certified, how much, that we should understand. For that, when 50% is only certified, what is the cost of the work done full-fledged? Actually, if we see, that is not 1084,400. That is 1084,400 minus of 35,400. So really the cost of work done full-fledged till date is 10,49,000. But how much the architect has given certificate for? He has given certificate only for 50% of the work. That means divided by 2. Means what is the cost of the work? 50% of the contract price. No, not, we cannot take this. So let us take it this way. 10,84,400 minus 35,400 is representing the cost of the work done till date. He certified not 50% of this. He certified 50% of the contract price. So how much would have been the total cost of the contract? That we can find out. If this is for 2/3, how much will be for total contract? 3/2. Right? Would have been, not real. In that, half is certified. So what is the value or cost actually of the work that is certified is 786,750. That is the cost of the work certified, 7,86,750. So naturally, when you take this, minus you get cost of work uncertified, that is 2,62,250. That's what we wanted. That is cost of work uncertified, 262,250. Once we have that also, you can just total and get the notional profit. That is 2,13,250. That's it. That is a contract account prepared. So all the data related to cost is given. It's all about copy paste. And work certified value is given. That is also not a problem. Main calculation here is cost of the work uncertified we should find out. For that, first of all, we should know what is the cost of the work done till date, net of materials issued at site and all, material at site or plant at site and all. Real cost actually incurred effectively 10,49,000. That is representing 2/3 of the total contract, because really work completed for 2/3. So how much would have been the cost for the entire contract? Would have been into 3/2. But on that only 50% is certified. That means the cost of work certified is 7,86,750. Once we have that, we can find out the cost of work uncertified. That is the cost of work uncertified. Taking that here to the credit side, we got the notional profit of 213,250. That's all. That is how contract account can be prepared from the information that is available. Now, let's move on to illustration number 6. Mrs. Bansal's Construction Company Limited took a contract for 60 lakhs rupees, expected to be completed in 3 years. The following particulars relating to the contract are available. 3 years details are given: materials, wages, transportation cost, other expenses, cumulative work certified, cumulative that is, and cumulative work uncertified is also given. Plant costing 3 lakhs rupees was bought at the commencement of the contract. Depreciation was to be charged at the rate of 25% per annum on the written down value method. Contractee pays 75% of the value of work certified as and when certified and makes the final payment on completion of the contract. Required to prepare a contract account for 3 years and total estimated profit or loss from the contract. So it is like not just one contract account, we have to prepare 3 contract accounts for 3 years. So let us prepare 3 different contract accounts. Of course, year after year only we have to prepare. So anyway, so let us start with year by year 20x6 whatever it is. So 3 years contract accounts, one after other only let us prepare. So start with the beginning of the 20x6. Materials is 6,75,000. Copy paste only. 6,20,000 wages. Transportation cost 30,000. Other expenses 30,000. Work certified cumulative is 13,50,000. Work uncertified, we have to assume it is at cost only because nothing is given. Normally, work certified is value, work uncertified is cost. So 13,50,000 and 15,000. Plant costing 3 lakhs was bought at the commencement of the contract. So 3 lakhs rupees plant debit to the contract account. And we can have a plant at site at the end of the year. How much depreciation was charged? He said 25% was charged on the written down value method. So it will be only 75% of whatever is original. So 2,25,000 is the plant at site. So what is the total of this? 15,90,000. And profit, notional profit can be computed like loss actually. So that means it should be other side. Totaling should happen other side. That means. First year notional loss has come. So what is the notional loss? 65,000, that was for first year. That is the cost that will be transferred to the costing P&L account for that year. So that is 65,000 first year's notional loss done. Next year, main point here to notice, these are assets. Plant at site will be starting here 2,25,000. That will be the starting point of 20x7 contract account. These are not for the year, these are carried forward assets. Those are. Then work certified already continues. So whatever was there earlier, that 13,50,000 will be starting point here. That is going to be the work in progress brought down 13,50,000 and 15,000. Right? Then whatever happened during this year, that has to be debited to that year's contract account. What happened during that year? 10,50,000 rupees material, 9 lakhs rupees wages, 90,000 transportation cost, 75,000 other expenses. Cumulative work certified on the credit side. Cumulative only we should take because already we have debited work certified for past year anyway. So that already once debited, credit should be given to the cumulative work certified only. That is 45 lakhs. And 75,000 is the cumulative work uncertified. There is plant at site, not material at site. That will be how much? Again, 75% of original at the beginning of the year. Why? Because it is written down value method. 25% written down value. If you reduce it, 75% will remain at the end of the period. These are the various items in the contract account for that year, that is 20x7. Now you can just take the total of all that and see whether which side is higher. This is 47 lakhs. This is 37 lakhs. So definitely this credit side is higher. 47, 43, 750 minus of all expenses which were already debited will give us notional profit for that year. That is 10 lakhs 38,750. That's it. That was for second year, we can say. Then the story continues to third year. Whatever the planted side here, that should come here to the next year at the beginning balance 168,750. Take it. Same way. Whatever the value of the work certified and uncertified also should come here as opening balance of work in progress. That is opening balance. Now, what happened during the period? That is given in the question. Once again, copy paste. During the year, 9 lakhs rupees materials were issued, 7,50,000 rupees labor cost was incurred, 75,000 is transportation cost, 24,000 is other expenses, and work certified was completely 60 lakhs, full price of the contract. Work uncertified was 0, nothing was there. And the planted site, again we can find out by taking 75% of the opening plant after depreciation of 25%, remaining is 126,563. So what would be the notional profit for this year? Once again, loss 366,188 loss it was. So yeah, let us go to the other totaling model. Debit side is higher than the credit side, so naturally there is a notional loss. That is how much? 3,66,187 or 88, whatever. That is the notional loss of third year. These are the three different things, and once you add up all of them, then what you get is the estimated profit from the contract. What is the estimated profit? You don't need an account and all separately. First year's loss, second year's profit, third year's loss. Estimated profit will be 6,07,563. That is the final answer for estimated profit from the contract. That was also asked, so we had to prepare that also. P&L account not required. Directly you can just prepare like a statement, no problem. But other three things, three different contract accounts we have to prepare, which we have done. That was illustration number 6. Now, look at illustration number 7. This one looks like a kind of standard costing also with standard and actual, but it is not actually standard costing. It is related to the escalation clause of contract costing only. Look at this illustration 7. A contractor has entered into a long-term contract at an agreed price of 17,50,000, subject to an escalation clause for materials and wages as spelled out in the contract, and corresponding actuals are also given. So as per original BOQ, what is popularly called bill of quantities, the standard quantities and rates are like this, which are all given here. These are the standard quantities and rates for materials also, wages also. Actual quantities and rates are given here. Wages also, standard, actual, both are given. Reckoning the full actual consumption of material and wages, the company has claimed a final price of 17,73,600. That is the claim that contractor has claimed. taking the actuals as basis. Give your analysis of admissible escalation claim and indicate the final price payable. Small question, like 5 marks question, can be asked like this. The point main here to be noted is, first of all, the escalation is not for quantity increase. Nobody asked you to use more quantity or estimate a wrong quantity in the first place. Escalation clause is agreed. In this case, it is there. But that will be for rate, not for quantities. If the contractor has failed to estimate properly, that is his fault. That will not be compensated by the contractee. But rate change, yes, that will be compensated because there is an escalation clause. So the point is, contractor will be always paid for the standard estimate what he has done only, standard quantity only, not for actual quantity. So actual quantity is actually useless in this particular scenario. It may not be really worth it also, the actual quantity wise. Let us just take some of these things, what they have claimed for, actual things. Actual things what they have claimed for. If you just take the numbers, copy paste 5050 3450 2600, these are materials. Then 2100 2450 3100, this is for labor. Quantities, these are, one is in tons, other one is hours, no problem. Then rate 48 79 and 66, then 72 75 and 66. So what is the claim of the contractor is on the basis of the actuals costs which are incurred and the standard cost which should have been incurred. Because there is an escalation, he is telling that you have to pay me extra. But what the contractor is doing, if we understand, just for understanding, not that we have to actually follow it, why the claim has become 17,73,600, if we understand, we can understand also why is it not admissible or admissible. For that purpose, let us take the standard quantities also here. Just copy paste the entire question for convenience. These are for materials, and 2000, 2500 and 3000 for labor. These are the standard things. Now the rate 50 80 60, then 70 75 65. So from this, what the contractor was trying to show the contractee is, he wanted to show that his cost has increased from what was originally projected. So let us just take the total cost, how much should have been material and wages separately. Maybe we can just have a total of all this, or separately also we can have it, whatever it is. So total cost originally, as per the expectation or standard, would have been, should have been this much. But how much is the actual cost according to the reality? 5050 into 48, actual quantities multiplied with actual prices. And then if we do the total once again. So what is the difference here? In the total cost, if you take, that is 23,600. 23,600 difference is there. And what was the original contract price? 17,50,000 was the original contract price. When 17,50,000 was the original contract price, and there is a difference of 23,600 in the total cost, what the contractor claims is, boss, I need 17,73,600 because you have to compensate me for this additional cost of 23,600. But now the question is that claim admissible? Answer is no, it is not. Why? Because the escalation clause only works for the rate, not for the quantity increases or decreases. So whether the actual quantity is more than standard or less than standard, it should not matter. But whatever the rate that is difference, definitely that is what escalation clause is eligible for. So naturally, what should be the difference between this actual and the standard price? If you take 48 rupees is the actual, 50 rupees was standard, so means there is a minus 2 rupees of saving actually, minus 1 rupee, 6 rupees additional cost. Like that, for labor also we can do. Difference between actual cost and standard cost. Okay. So here there is no difference, 0, nothing. Now, this has to be multiplied with, this difference only has to be multiplied with the standard quantity. So 5,000 only you are supposed to use, nothing more, nothing less. So whatever you actually used, the contractor does not care. But because there is a change, here there is a reduction. So actually there should be a reduction in the contract price of 10,000 in that particular scenario. There should be another 3,500 reduction. But here there is an increase. So as far as materials is concerned, there is a 1,500 only that escalation is admissible for the increased price. Same way for the labor. How much is admissible? Only 7,000 is admissible. That means the total escalation that is admissible here is only 8,500 but not 23,600. So standard quantity multiplied with only the change in the actual rates is the escalation that is admissible, because escalation can be only possible for rates but not for quantities, as against what the claim of contractor was. Contractor claimed something which is not admissible. 8,500 only will be admissible. In other words, what should be the final price that is payable by the contractee? It should be 17,50,000 plus 8,500. So 17,58,500 can be the maximum claim that contractor can put to his contractee, but not what he has claimed as 73,600. So that is a point here to be noted. Main essence of this question is this. It is a fundamental principle that contractor would compensate the contractor for the increase in cost which are caused by factors beyond the control of contractor. Maybe generally inflation, that happens natural, like macroeconomic factors, price changes that happen. But definitely compensation or escalation will not be for increase in the cost which are caused due to either inefficiency or wrong estimation. So simple logic, application wise, increase or decrease in quantity should be ignored. Only increase or decrease in rates should be considered. Apply that on the standard original quantity which the contractor was supposed to use. That is the only admissible escalation for a particular contract, if there is an escalation clause like that. That's it. That is about some of the illustrations in the contract costing, and we'll solve some more questions also at the end of the chapter. Question number 2 at the end of the chapter says, compute a conservative estimate of profit on a contract which is 90% complete from the following particulars. Calculate the proportion of profit should be taken to the costing P&L account under various methods. This is actually not required, because I don't know if it is there also or not. No methods and all are now mentioned. Earlier that they used to be there as part of the syllabus. Now it is not there. So don't worry about the how much amount to be taken into the P&L account and all, because that is according to A7 we have to do. That is not the purpose of contract costing. But general calculation, estimation can be done. Just estimated profit can be calculated. Total expenditure to date is 4,50,000. Okay, fine. Estimated further expenditure to complete the contract is 25,000. So total estimated expenditure of the contract would be 4,75,000. Then contract price is 6,12,000 as given in the question. So naturally, what is the estimated profit? Contract price minus total estimated cost of the contract, 1,37,000. Remaining things are all irrelevant. So 1,37,000 is the answer. That is not a very valid question also, actually cannot be expected in the exam also. Just for understanding purposes, estimated profit means the profit which might be generated by the contract once it is completed in future. So that is how, if the contract price is fully received in future, and then if total estimated cost of the contract is reduced from that, we get estimated profit. That's only general question, not a question that can be expected in the exams also. Normally the questions that can be expected in the exam are contract account preparation type of questions, whether 1 year or multiple years, and as one of the other questions we have done for a small question, right, like escalation clause also can be asked. These are possible things. Now, look at question number 3, which also is a quite possible 10 marks question. Fantastic question. Why? Because he is giving the data related to past also and future also. What is required here? Prepare a contract account for the year ended also and calculate estimated total profit on the contract also. Estimated is about future, contract account is about the past. So both are included here. That is why third question is the best possible question which can be expected in the examinations. Let us look at that. So AKP Builders Limited commenced a contract on April 1st of 20X8. Let us call it 2008. Every time X8, X9 and all not required. 2008, let us say April 1st of 1 year, the contract was commenced. The total contract was for 5 lakhs rupees. That is the contract price. Actual expenditure for the period April 1st, 2008, beginning of the year, to March 31st, 2009. For one complete year, actual expenditure is given. Also, estimated expenditure. This is not actual. Estimated expenditure for April 1st, 2009 to December 31st, 2009 only is given. That means only for 9 months it was given, which is an estimated expenditure. Naturally, by 31st December 2009, the contract would be completed. So 2008-9, it was actual. For the next 9 months, it was estimated. And what was required by us to be prepared by us is a contract account for the year ended 31st March 2009 and also calculate estimated total profit on this contract. Estimated thing comes later, which is a futuristic thing. First, let us focus on the preparation of contract account. Normally, what is supposed to be prepared. So, contract account. Let's take the same format and fill the data whatever is available with us. So that is a contract account which was asked for the year 2008-9, right? 31st March 2009. That is a year for which the contract account is supposed to be prepared. So let us take the information that is available in the question one by one. Of course, contract price is 5 lakhs, which is different. Now, cost wise, actual costs, all that we have to copy paste. Materials issued 90,000 rupees should be there, of course. And wages paid are 75,000. But outstanding wages are also wages incurred only at the end of the year. 6250 also should be added to that. So total wages incurred will be 81,250. Paid plus outstanding. Plant was 25,000. Then sundry expenses paid 7250 expenses. Prepaid means they should be excluded. Prepaid at the end of the year means that is 625 should be excluded now, which will become expenditure for the next period. So here small adjustment of outstanding to be added to the expenditure, prepaid to be reduced from the payment that is to be taken, so that we take accrual basis than cash basis. So 7250 minus 625 is the sundry expenses. Establishment charges 14,625, that is given. Then further information given about a part of the material was unsuitable and was sold for 18,125, cost being 15,000 only. So what was debited here is cost, and materials sold is for 18,125. 18,125, that is the materials sold. Simply, what about the remaining 18,125 minus the cost of that originally was, that is profit. That is 3,125. That can be directly transferred to the costing P&L account, because for that there is no need of completion of contract. We don't have to wait and all for that. It is not from the contract. It is separate profit generated by sale of materials. So 18,125 sale proceeds minus the cost of that was 15,000, which comes to 3,125 as the profit from the sale of materials, which can be directly transferred to the profit and loss account in the same year. Then a part of the plant was scrapped and disposed of for 2,875. That is also proceeds from sale of plant. So plant originally 25,000. In that some portion was sold off, means that is 2,875 to be credited. Then the value of the plant at site at the end of the year was 7750. That is the plant at site 7750. Value of the material at site was 4250. Both are to be credited. Cash received is something different, but that is representing 80% of the work certified. That will tell us work certified, because if 1,75,000 is representing 80%, then how much will be our work certified into 100 by 80? That means work certified would have been 2,18,750. So that is work certified indirectly given. And the cost of the work uncertified was valued already. It is the cost, which is the correct one. Already valued. We don't have to do anything. Just take that 27,375. So these are the actuals which have happened during the year 2008-9, let us say. Of course, after that, estimated some other things are also given, further expenditure, that we will deal with separately, because that will be useful for finding out estimated profit than the actual thing or notional profit for the completed year. So this question has two parts. First part, contract account for the year ended 31st March 2009. That is what we are preparing. So we have all the data related to the contract account. Credits and debits both are there. Let us just take which one is higher. Yes, credits are higher. So there will be definitely a notional profit for that particular year. That is how much? 65,125 rupees is the notional profit. Let us just quickly check that. Ninety thousand, 81, 250, 25,000, 6625. What is this 6625? Sundry expenses. Why some amounts have gone? I'm not able to understand. Okay, I think I'm typing in the same cell again rather than typing in the other cell. Mistake. 14,625 is okay, but this sundry expenses, I have replaced it, I guess. So 7250, which should have been there already, minus of 625, which is prepaid. Yes, 58,500 is the notional profit. That is correct. Yeah. So 6625 sundry expenses also should be there. Instead of typing in the other cell, maybe I would have typed in the same cell. That was replaced unnecessarily. So wrong thing that was. So 58,500 is the correct notional profit for the year that has completed already. Now we have to also find out the estimated profit. Estimated profit can be found out by taking already whatever the cost that has been incurred plus the additional cost that is going to be incurred in future. So what are the various aspects to be considered for estimated profit? We can prepare a statement for that. We don't need a separate account and all for that. So what is the estimated profit? Is the total profit that can be estimated on this entire contract. It is not related to only 1 year or period. It is from the entire contract how much profit can be generated. For that, we can prepare a statement showing computation of estimated profit. For that, first let us take contract price, that is separate, which is 5 lakhs rupees as given in the question. Contract price is 5 lakhs. Keep it aside. Then we have to take down all the costs which are related to the contract. For that, we need to identify one by one what all will be there. First thing first, materials cost. Look at the further information before going ahead with the computation. The contractor estimated further expenditure that would be incurred in the completion of contract. The contract would be completed by 31st December. That is first point. A further sum of 31,250 would be have to be spent on the plant, and the residual value of the plant on the completion of the contract would be 3750. That is another point. That is the residual value at the end of the completion of the contract. And establishment charges would cost the same amount per month as in the previous year. and 10,800 we can provide for contingencies also while computing the estimated profit. We can prepare a kind of memorandum contract account also for the entire contract, that is also okay. Or alternatively, we can just prepare a statement also, that is also okay. Either way, it is all fine. So contract price is different. Let us take the materials cost and other things one by one. Materials. Materials issued how much? Originally, that is 90,000, right? In that 15,000 worth of materials are gone. Cost of them was 15,000. Profit anyway is already separate. That has nothing to do with contract. So 15,000 worth of materials are gone from this 90,000. Then materials which are at site, at the, are there anything like that? No. Yeah, there is. Yeah, there was a value of material at site which was 4250. That can be just reduced and added. There's no point in that, because in the first year it was there at the end of the year. That will be there at the opening balance for the next year. So minus and plus does not make sense. But just we can add the materials freshly issued in the next 9 months period as given in the question, 85,750. So the total cost of materials would be this: 90,000 minus of 15,000 cost, which was cost of the material sold, plus 85,750. Like that. Wages paid 75,000, plus 6250 minus 6250 for the next period doesn't make sense. So we don't need to do that 6250 adjustment. But paid in the next year, 87,325. That includes 6250, by the way. So 87,325 is paid. But at the end of that period also there is one more outstanding, that is 8,300. So the total wages will be 170,625. Then plant. Plant is also important calculation. 25,000 original. Then scrapped was 2875. Take it out in the first year. Then further plant was introduced to 31,250. Add that 31,250. And value of the entire plant at the end of the contract would be 3750 minus 3750. So that means the total plant that is actually used during this entire contract, not just for one period, for the entire contract will be 49,625. That is a plant related expenditure, we can say. Then plant at site, material at site, which becomes closing balance of this year, becomes opening balance of the next period. So they will get nullified. We don't have to separately treat them. From the beginning till the end, what is the story? That only we have to take. So 49,625 is the plant related expenditure. Then sundry expenses. Sundry expenses paid are 7250. Paid they are. Once again, prepaid means they will be reduced now and will be added in the next period. So doesn't make sense, not required. 6875. Paid means really that is incurred also in the next year, nothing prepaid. So exactly payment and expenditure will be equal when you consider the entire 1 year 9 months period. So this payment and all, prepaid and all, not necessary to be adjusted. Minus and plus we can do, but ultimately that doesn't show anything. Then establishment charges. Establishment charges for 1 year it was 14,625. That was okay. But what he said, they will be same per month as in the last year. So 14,625 is anyway there. That was already incurred. Plus what? 14,625 into 9 by 12. Why? Because only for next period, estimated period, only 9 months it is going to be from April to December. So total establishment charges will be 25,594. That is one more aspect, and contingencies he has asked to be provided for 10,800. These are the costs when you take the entire contract, forgetting about period and all. Total materials which are issued, total wages which are actually incurred, plant expenditure incurred, expenditure, sundry expenses, establishment charges, everything. So what is the total of all of that if you take? That will be the total cost of the contract. That is 4,31,519. That means what is the estimated profit from this contract? 68,481. That is the estimated profit from this contract. Now let us solve one more question, the last question in the essay material. Question number 4. RST Construction Limited commenced a contract on 1st April 2008, and the total contract was for whatever amount, 49,21,875, and it was decided to estimate the total profit on the contract and to take the credit of costing P&L account, that proportion of estimated profit on cash basis which work completed bore to that contract. Once again, recognition of cost, profit or loss on contract is not required here. It has to be done at accounting standard 7. Here our main job is to find out the notional profit if the work has already been done, and estimated profit for the future. In general, that will be the one, and how much to be taken to P&L account is not generally the scope now. Earlier it was, but not now. So here the actual expenditure is given for the period year completely 2008-9, we can say. For that actual expenditure, same like earlier question, and estimated expenditure for April 2009 to September 30th 2009 is given. So here the estimated is given only for a period of 6 months. Earlier question it was 9 months, here it is 6 months. Remaining things are more or less the same. And this is actuals, which actually really happened in the year 2008-9. And various details are given. Also, what is required here is prepare contract account for the year ended 31st March, which is real, actual. Then also determine the estimated profit on the contract. So, same type of earlier question given. From the information we have to prepare contract account as well as compute estimated profit. For computing estimated profit, we can use a statement also, account also, that is not a problem. That is our choice. Ultimately, the answer should be correct. So let us prepare, or maybe we can just take out the numbers here itself. From the information that is given, we can just put. Incidentally, year is same, April 2008-9. Then contract price is of course different. And let us see if there are any changes in these numbers and all. Whatever the data is there, that we have to just fill in the contract account. Estimated and all will come to it later. First, let us look at actuals. So, actuals for the year 2008-9, what happened? Materials issued 7,76,250 debited first to the contract account. Wages paid are given, prepaid and outstanding both are given. Naturally, outstanding should be added, prepaid should be deducted. Maybe you may get a doubt why there are both. How can there be both? Possible, different labor may be there. Some categories of labor, maybe there is prepaid wages. Some other category of labor, there may be outstanding wages. Doesn't matter. So, but the point is adjustment. What is adjustment? 517,500 plus 12,500 minus 37,500. Add outstanding, deduct prepaid. That gives the wages incurred actually during this period, because we are preparing a contract account for a period, not for the contract as a whole. For the period of 2008-9 year, we are preparing this. In that period, wages incurred is only this much, 492,500. Plant purchased is 4 lakhs, debited first. Whatever changes happen, we can credit them later. Then expenses are given, which are once again given as paid 2,25,000. Then add 25,000 outstanding. Deduct 15,000 prepaid. So that is expenses. Let me check if I am not doing the same mistakes. Yeah. So materials is taken care of. Wages is done separately. Plant purchased is 4 lakhs. Expenses is also done, 2,35,000. Paid plus outstanding minus prepaid. Now, plant returns to store at the historical cost was 1 lakh rupees worth of the plant was returned on 30th September 20x8. That is an interesting point because plant returned means 1 lakh rupees should be credited, returned back to the store. From contract, it is given back. But the point is, for the period from April 2008 to September 2008, we have to provide depreciation. So what should be the depreciation for that period that we should calculate separately? How much was the value of the plant returned? 1 lakh. What was the rate of depreciation that was given here as 25% on written down value method? So here first year only, so 25% of that will be 25,000, but only for 6 months. Why? From April to September only, 2008. So depreciation should have been 12,500, which means plant return to site actual worth will be how much? It will not be 1 lakh. 1 lakh minus depreciation. Automatically that 12,500 is there on the debit side already. So the real worth of the plant returned back to the store was 87,500 only. That is the adjustment to be done. For plant returned, we have to provide the depreciation for those months for which that plant was used for this contract. So we cannot say 1 lakh historical worth of machine means automatically 1 lakh will be credited. No, 87,500 only is credited to the contract account. Then further information like work certified is given, just copy paste, 22 lakhs 50,000. Work uncertified is 25,000. So normally work certified means value, work uncertified means cost. If nothing is given, that is what you have to take. Cash received doesn't matter in contract account. It has no relevance. Materials at site, of course, yes, that matters. Materials at site, 82,500, that is given. But now plant at site is not given. That we have to calculate once again. Why? Because some portion of the plant was returned and remaining plant will be there. So how much would be the plant at the site? When you say 4 lakhs is the original worth of the plant, in that 1 lakh worth of the plant was already returned, then 3 lakhs is the remaining plant at a cost basis. But 75% only of the value will be remaining at site now. Why? Because 25% is depreciation. So you can take separately also, taking 3 lakhs, then taking 25% of that as depreciation for the entire year, because this was used for entire year. Then what will be the plant at site at the end of the period? That will be 2 lakhs 25,000. For this also, separate working notes can be written and computed. So these are the various items related to the real things that happened already in the year 2008-9. That's all. All that we need to do is total, which side is higher. This is 26 lakhs. This is only 19 lakhs. So definitely this side is higher. So what is the notional profit we can say in this case? Notional profit is 7,66,250 for that year of 2008-9. 766,250 is the notional profit. Let us just check that. Yes, it is 7,66,250. That is first part of the question only. But there is other part of the question also which we are still to do. That is computation of estimated profit on the contract. Estimated profit also has to be computed. Now, again, as I said, it can be just taken like a statement or even an account can be prepared for the entire contract for the entire period. Either way, it's okay. Because we already did it, let us do it the same way. We can prepare a statement. Doesn't matter, credits, debits only matter. Plus minus is the only thing. Ultimate answer should be same. How much is contract price here? 49 lakhs 21,875. Okay, that is a contract price. We know that. Now, one by one, each of the costs that we have to take from current already situation plus what is going to be further issued for the period of 6 months that is going to happen later. Now, when it comes to materials, 7,76,250 is there. Materials at site normally would be reduced now, but again that will be plus. There is no point of minus and plus once again. So materials really issued are how much? Just total of both of them. 776,250 plus 12,99,375. That is the total of materials cost. Wages. Once again, wages. Paid is 5,17,500. Okay. Whatever is prepaid or outstanding, that will be only adjustment now. That should get automatically adjusted in the next year. So we don't need to do that adjustment now. Plus and minus again does not make sense. So wages paid 550,700 matters. Plus wages really paid in the next year also, next period also 6,18,750. But at the end of that period, wages outstanding definitely will be included. 5750. That is the total of wages 11,42,000. In between, whatever happened, once it is minus, another one, next year it will be plus naturally. So that need not be done separately. Then plant. Plant is a very important calculation here. What should be done here is plant purchased is 4 lakhs. Right? Minus of, in the first year, plant returned to stores was 87,500. That was the value of it. Then later, how much would be the plant at site at the end of the year, end of the next period, that we have to find out. As far as our calculation was concerned, it was 2,25,000. So earlier it was that much. 2,25,000 it was. Now for that 6 months period, there will be depreciation that should be provided on this on a written down value basis. So 25% on that. If you reduce, what will be the plant value at site at the end of the 6 months period or at the end of the contract? 1,68,750. So 4 lakhs minus of 87,500 plant returned minus of plant at site at the end of the contract 168,750. So the real plant expenditure will be 143,750. Like that. Expenses also. Expenses paid 2,25,000. If you say outstanding now, you will add it and then deduct it from the paid later. No need of that. If you say prepaid now, that is anyway related to the next year. So that would not have been included in the paid next year. So just 2,25,000 plus the 3,75,000. Next period's outstanding 10,000. It should be included because it is not yet paid. So total of expenses will be 6,10,000. This establishment charges and all not there in this question. That's all. These are the only things which are there. Materials at site at the end of the period are there 42,500. They should be reduced from original materials cost. Why? Because they are at site at the end of the period. This one intermediate calculation not required. Once again, why? Because minus and plus. These are the things. No contingencies, nothing has been given. So let us just take the total of the costs, all of them. And then naturally what is going to be the estimated total profit on the entire contract. That is around 9,93,000. Let us look at that. Materials at site, if you reduce it, it should be same. Where is the difference? 2075, 625 minus 42,500. That is okay. 2033,125. Same thing we have taken. Wages 11,42,000 is okay. Expenses 6,10,000 is okay. This is okay. Then plant will be what? 4 lakhs. Oh, yeah. I think that is where we did a mistake. Depreciation here for 6 months only, not to be provided. We provided for full year. That is wrong. That is a mistake. So here, 2,25,000 into 25% for only 6 months we have to provide. So 6 months means, let us say, divided by 2 or into 50%. Yes. 196,875 only should be the plant value at the end of the month, end of the period, which means profit will also change to 10,21,125. Yes, that is correct. Depreciation calculation here for full year we should not do, only for 6 months we have to do. for the plant at site calculation what we have done. That's it. 10,21,125 is the estimated profit from this contract as a whole, we can say. And any other workings that are required here can be shown separately, so that final answer should be definitely correct. Care should be taken for period as usual, and the numbers when we look at each of them. Ultimately, what is the total cost that is incurred for the entire contract is what we should take into consideration. Considering that 10,21,125 is the estimated profit from the contract. How much of this to be taken to the P&L account and all, in general not required, because first of all this is not real profit, this is estimated profit. This is notional profit. Here also entire amount cannot be taken. How much to be taken will not be decided in costing, that will be decided in accounting standard 7. So that is the point to be noted. With that, we can conclude this contract costing as well. Fine then. Take care. Bye bye. Thank you very much.